You're not unlucky. You're unstable under pressure. That's the brutal truth nobody told you when you opened your first trading account. Nobody warned you that the market doesn't care about your intentions, your effort, or your dreams. Nobody told you that it's not designed to reward hard work. It's designed to expose weakness. So you built a narrative instead. It's market manipulation. Smart money is hunting stops. My broker widened the spread. News ruined the setup. This week is just weird. Bad luck. There's always a reason. Always something external. Something that protects your ego from the possibility that the problem isn't out there. It's in here. Because accepting that hurts. It's easier to believe the game is rigged than to admit you can't control yourself under pressure. Let's paint the picture honestly. You wake up early. Maybe before sunrise. The room is quiet. The world is still. You check your phone immediately. Futures are moving. Forex pairs are active. Crypto never sleeps. Your heart beats a little faster. You tell yourself this is dedication. You make coffee. You open your charts. You mark your levels carefully. Support, resistance, liquidity zones, trend lines. You feel prepared, structured, in control. You remind yourself, today I follow my plan. You wait, the setup form you enter. And then it goes against you. Not violently. Not dramatically, just enough. Your stop gets hit, a normal loss. The kind your backtesting clearly shows is part of the system. The kind you told yourself you were ready for. But something shifts inside you. Your jaw tightens. Your breathing changes. Your chest feels slightly heavier. You don't say it out loud, but a thought appears. That shouldn't have lost. Now it's no longer about probability. It's about being right. You scan the chart aggressively. You start seeing setups everywhere. You convince yourself there's another opportunity forming. Even if your checklist isn't complete, you enter again. This time you increase the lot size slightly. Not dramatically. Just enough to recover faster. It goes red. You feel heat rising in your body. Your focus narrows. You're not calmly analyzing anymore. You're reacting. Why is it doing this? This move makes no sense. They're clearly manipulating price. I can't end the day red. And right there, that sentence, I can't end the day red, exposes everything. Because trading was never supposed to be about today. It was supposed to be about long-term execution. But your brain doesn't care about long-term when ego is bruised. Now the spiral begins. You take a trade early. You close it too quickly. You re-enter at a worse price. You move your stop. You remove your stop. You add to a losing position. You double down. This is no longer strategy. This is emotion disguised as analysis. Within one session, the weekly gains you were proud of disappear. The equity curve that looked stable yesterday now has a sharp drop. Your screen feels heavier. The candles feel aggressive. Every tick feels personal. You sit back in your chair, silence. And then the justifications begin. The market was choppy. News volatility ruined it. My broker widened spreads. Smart money trapped retail. But here's the uncomfortable question you avoid. If the strategy works, if you've seen it work, if others can execute it, why can't you follow it consistently? Why does discipline vanish the moment money is involved? The market is not against you. The market is neutral. It doesn't know you exist. It doesn't care about your rent, your goals, your family, or your pride. It simply moves according to supply, demand, liquidity, and collective behavior. What it does do, with ruthless precision, is expose who you are under pressure. It exposes impatience when you enter early. It exposes fear when you close winners too soon. It exposes greed when you over-leverage. It exposes ego when you refuse to accept a loss. It exposes insecurity when you system hop after 2 red trades. It exposes addiction when you keep clicking just to feel in control. You think you're fighting the market. You're actually fighting yourself. And here's the part that stings the most. You probably already have enough knowledge. You've watched the tutorials. You've backtested the setups. You've saved screenshots of perfect entries. You know risk to reward ratios. You understand probability. But knowledge without emotional stability is useless, because the real battle doesn't happen during analysis. It happens the moment price goes against you. It happens when your stop is 5 pips away. It happens when your trade is almost at target and starts pulling back. It happens when you're down for the day and your brain whispers, just one more. That whisper is not strategy. It's ego trying to escape discomfort. And discomfort is something you've been avoiding your entire trading journey. You don't actually fear losing money as much as you fear being wrong. You don't actually hate drawdown. You hate what it says about you. So you react. You revenge trade to feel powerful again. You increase size to recover faster. You overtrade to avoid sitting in silence. You blame the market so you don't have to question yourself. But the market keeps responding the same way. It keeps exposing. It keeps highlighting the cracks. It keeps showing you that under pressure, you abandon your own rules. And that's the real instability. Not your strategy. Not your indicators. Not the broker. You. The version of you that needs immediate validation. The version of you that can't tolerate uncertainty. The version of you that confuses activity with productivity. The version of you that wants to feel smart more than it wants to be consistent. That's the enemy. And until you face that, no strategy will save you. Because even if someone handed you a system with a proven edge, even if you knew with certainty it wins over 100 trades, you would still sabotage it the moment your emotions spike. Because the real problem was never technical, it was psychological. The market is not a place where you prove intelligence. It's a mirror. It reflects your patience, your discipline, your insecurity, your impulsiveness, your fear, your greed. It reflects who you are when money pressures your identity. So when you ask, why am I not profitable yet? Maybe the better question is, who do I become when I'm under pressure? Because your real enemy isn't the chart, it's your psychology. Ed Mox. You don't have a strategy problem. You have a discipline problem. That sentence alone threatens your entire belief system. Because if it's true, it means the solution isn't another indicator. It isn't a secret setup. It isn't a mentorship. It isn't a smart money, refinement. It means the problem is you. And that's uncomfortable. So instead, you convince yourself the edge just isn't strong enough. The strategy needs tweaking. The entries need precision. The stop loss needs optimization. But let's look at your real cycle. You take a loss. Immediately doubt enters. Maybe this strategy isn't good. Maybe the market conditions changed. Maybe this system only works sometimes. You open YouTube. You search Best Strategy 2020 SIPs. High win rate setups. No loss system. You find something new. It looks clean. The backlists look amazing. The thumbnails show massive profits. The comments say, "This changed my life." Hope returns. You feel motivated again. You switch templates, new indicators, new rules, new excitement. For a few days, maybe even a week, you follow it carefully. You get a couple of wins. Confidence rises. Then a losing streak hits and the cycle restarts. Lost doubt search new system, a temporary hope repeat. This isn't optimization, it's addiction. You're addicted to the feeling of starting fresh. Because starting fresh means you don't have to face the real issue. Inconsistency. Here's the truth most traders don't want to hear: most strategies work. Not perfectly. Not every day, not in every condition, but over a large enough sample size with proper risk management, many simple systems have edge. The problem is not that your strategy fails. The problem is that you fail your strategy. There's a massive difference between knowing what to do and doing it consistently. You know you shouldn't move your stop loss. Yet when price gets close, you drag it further away. You know you should let winners reach target. Yet when you're up a small amount, you close early because you're afraid it will reverse. You know your system requires specific confirmation. Yet when you feel like you might miss a move, you enter early. That's not a knowledge gap. That's emotional instability. Fear of missing out controls your entries. Fear of losing controls your exits. Ego controls your position sizing. Impatience controls your frequency. You tell yourself you're adapting to market conditions. But if you're honest, you're reacting emotionally. Look at your winners. How many times did you close them early, only to watch price hit full target without you? Why? Because small profit felt safe. You wanted to lock something in. Now look at your losers. How many times did you move your stop just a little further? How many times did you say, "It will come back"? How many times did you turn a small, planned loss into a large emotional one? That's not bad strategy. That's self-sabotage. You're cutting your winners short and letting your losers breathe. You're flipping the entire math of your edge. And then you blame the system. Overtrading is another symptom. Your strategy might call for 2 quality setups a day, but you take 6, because sitting still feels uncomfortable, because no position feels like no progress, because action feels productive, even when it's destructive, so you click again. And again you convince yourself more trades equal more opportunity. But in reality, more trades equal more emotional exposure. Every unnecessary trade increases the chance you'll break rules, and every broken rule weakens discipline further. Here's the uncomfortable realization: you don't need more intelligence. You need more consistency. There are traders less smart than you who make money, not because they understand market structure at a deeper philosophical level, but because they follow simple rules without negotiating with themselves. Consistency beats intelligence in trading. An average strategy executed with discipline will outperform a brilliant strategy executed emotionally. Read that again. Because your ego wants complexity. It wants to feel superior. It wants advanced concepts, secret liquidity models, hidden algorithms. But the market rewards boring consistency. Can you take the same setup 100 times without modifying it midway? Can you accept 10 losses in a row without abandoning the system? Can you risk the same percentage whether you just won 3 trades or lost 3 trades? That's discipline. And discipline is not exciting. It's repetitive, it's structured, it's unemotional, it's almost mechanical, which is exactly why most traders avoid it. They prefer the emotional roller coaster, the rush of a new system, the dopamine of a big win, the drama of revenge trading, the hope of a reset. But hope is not a strategy, and switching systems is not growth, it's avoidance. Avoidance of sitting through drawdown. Avoidance of accepting probability. Avoidance of confronting your own lack of control. So when you say, I just need a better strategy, what you might really mean is, I don't trust myself to execute this one. That's a discipline problem. And until you fix that, every new system will eventually fail in your hands. Not because it's broken, but because your execution is. You don't rise to the level of your knowledge. You fall to the level of your habits. So now the real question appears: if discipline is the problem, then what creates discipline? The real enemy isn't your strategy. It isn't the market. It isn't volatility, it's your identity. This is where things get uncomfortable, because surface-level psychology is easy to talk about. Control your emotions. Be disciplined. Follow your plan. That sounds simple, but discipline doesn't break randomly. It breaks under pressure, and pressure reveals identity. You don't trade according to what you know. You trade according to who you believe you are. If deep down you fear losing, your behavior will revolve around avoiding loss, not executing edge. If deep down you need validation, every trade becomes a test of your intelligence. If deep down you need quick money, patience will feel like punishment. If deep down you're desperate, you won't manage risk, you'll chase outcomes. Your results mirror your internal state. Think about it. When you enter a trade, what are you really trying to do? Are you calmly executing probability, or are you trying to prove something? Scarcity trading feels tight, urgent, heavy. You look at your account and think, I need this to grow. You calculate what one good trade could do. You imagine how close you'd be if this hits target. Now the trade isn't just a trade, it's rent, it's status, it's relief, it's self-worth. That's scarcity, and scarcity makes you force setups. It makes you over-leverage, it makes you panic close winners, it makes you refuse to accept losses. Because losing doesn't just reduce capital, it threatens identity. Confidence trading feels different. You don't need this trade to win. You don't mentally spend profits before they exist. You don't attach your mood to the candle color. You execute. You let probabilities play out. You move on. But most traders aren't operating from confidence. They're operating from need. Needing to win is the fastest way to sabotage yourself. Because when you need to win, you can't think clearly. Every pullback feels personal. Every red candle feels like disrespect. Every stop loss feels like humiliation. You start fighting the market, not because the market attacked you, but because your ego feels attacked. Ego trading is subtle. It sounds like this. This setup is perfect. It has to work. I can't be wrong on this. They're not taking my stop again. I know what I'm doing. Notice the language. It's not about execution. It's about being right. Profitable traders don't try to win every trade. They try to execute flawlessly. That shift changes everything. Because flawless execution accepts losing trades as part of the design. Ego cannot accept that. Ego wants a high win rate so it feels intelligent. Ego wants big wins to feel powerful. Ego wants to avoid losses to feel competent. So what does ego do? It holds losing trades, not because the setup is still valid, but because closing the trade means admitting, I was wrong. So you move the stop. You widen the invalidation. You say, it just needs more room. You turn a controlled loss into a bleeding wound, all to protect identity. And then there's the opposite side. You close winners early. Why? Because deep down you don't fully believe you deserve large, clean wins. You think take it before it disappears. That's fear. That's scarcity again. Emotional attachment to outcomes is what destroys execution. When you're attached to the result, you cannot stay neutral. When you need the money, you cannot let the trade breathe. When you need to be right, you cannot cut losses quickly. When you define yourself by today's P&L, you cannot think long-term. And patience. Patience feels uncomfortable because it threatens the identity of someone who believes success must be fast. If you believe money should come quickly, waiting feels like failure. If you believe action equals progress, sitting out feels lazy. If you believe more trades mean more opportunity, discipline feels restrictive. Your identity creates your comfort zone, and right now, your comfort zone might be chaos. You might unconsciously prefer volatility in your equity curve. You might prefer the emotional highs and lows, because calm consistency feels boring, and boring doesn't feed ego. Here's the truth most traders never confront: that your trading behavior is a reflection of your self-image. If you see yourself as someone who always struggles, you'll find ways to struggle. If you see yourself as someone who almost makes it, you'll sabotage near breakthroughs. If you see yourself as someone who needs to prove themselves, every trade becomes a battlefield. You cannot outperform your identity long-term. You can temporarily act disciplined. You can force control for a few days. But under stress, you revert to who you believe you are. So if you believe you're impulsive, you'll act impulsively when pressure rises. If you believe you're unlucky, you'll interpret randomness as personal attack. If you believe you're behind in life, you'll rush trades trying to catch up. The market doesn't care about these narratives, but it will expose them over and over again. That's why two traders can use the exact same strategy and get completely different results. One is executing, the other is proving, one is managing risk, the other is protecting ego, one accepts probability, the other demands certainty, and certainty does not exist here. So ask yourself something uncomfortable. When you lose a trade, what hurts more, the money, or what it says about you? When you win, what feels better, the profit, or the validation? Until you answer that honestly, you'll keep fighting the wrong battle. Because the real enemy isn't the chart, it isn't volatility, it isn't smart money, it's the identity you bring into the trade. And if identity controls behavior, how do we change identity? This is where the shift happens. Not the shift in strategy, not the shift in indicators, the shift in identity. From emotional trader to professional, up until now, you've been reacting to candles, reacting to P&L, reacting to fear, reacting to ego. A professional doesn't react, a professional operates from structure. So what changes? First, you trade fewer setups. That sounds simple, almost too simple, but it's powerful. The emotional trader believes more trades equal more opportunity. The professional understands that more trades equal more exposure to emotional mistakes. You don't need 10 trades a day. You need 1 or 2 clean executions that meet strict criteria, fewer trades, higher standards, zero negotiation. You stop convincing yourself that this is close enough? Close enough is expensive. Second, you define strict risk per trade. Not flexible risk, not emotional risk, not I'll size up because I feel confident risk, fixed risk. The same percentage whether you just won 3 trades or lost 3 trades. Because the professional understands something critical. Position size should never be influenced by emotion. When you increase size after losses, that's revenge disguised as confidence. When you increase size after wins, that's overconfidence disguised as momentum. Consistency in risk builds stability and equity. Stability builds confidence. Third, you predefine the exit before entry. Before you click buy or sell, you already know where you're wrong, where you take profit, where the trade idea is invalid. No moving stops, no emotional adjustments. No, let's see how it reacts. If the stop gets hit, it gets hit. If target gets reached, you take it. Execution over opinion. This removes negotiation during pressure, because negotiation is where emotions sneak in. Fourth, you journal emotions, not just entries. Most traders write entry 1.2 defeat stop 1.20 target 1.2 100 result. War, that's mechanical. But what were you feeling? Were you impatient before entering? Were you afraid when price pulled back? Did you want to move your stop? Did you hesitate on a valid setup? Your emotions are patterns, and until you track them, you'll repeat them. A professional doesn't just track performance, they track behavior, because behavior determines performance. Fifth, you focus on process, not money. This is the biggest shift of all. The amateur mindset wakes up thinking, how much can I make today? That question alone creates pressure, because now every trade carries expectation. Every loss feels like delay. Every missed setup feels like lost income. Every red day feels like failure. The professional mindset is different. It asks, did I follow my rules perfectly? That's it. Not did I wink. Not how much did I make. Not was today green. Just execution quality. Because money is a byproduct of emotional control. Read that carefully. Money is not the direct reward of intelligence. It's not the reward of prediction. It's not the reward of effort. It's the byproduct of controlled execution over time. If you control risk, if you execute your edgy, if you remain consistent, the numbers eventually reflect it. But when you chase money directly, you distort behavior. You force trades. You size emotionally. You override rules. Now think of trading like a casino. A casino doesn't panic after a few people win. It doesn't double its risk because it had a slow afternoon. It doesn't close games early because someone hit a streak. The casino knows something powerful over time. The edge plays out. Individual outcomes don't matter. Process matters. The casino focuses on rules, risk management, volume over time, statistical advantage. It doesn't celebrate individual wins. It doesn't cry over individual losses. It operates. That's the mindset shift. You stop trying to win this trade. You start trying to execute the next 100 trades flawlessly. You detach your self-worth from daily P&L. You measure success by discipline. You accept that some days will be red, some weeks will be slow, some months will test patience, but none of that changes your behavior. Because now you're not trading from need. You're trading from structure. This is where hope becomes real, not the emotional hope of, maybe this trade will save me, but structured hope. Hope rooted in probability. Hope built on repetition. Hope backed by data. When you trade fewer setups, you reduce chaos. When you fix risk, you reduce volatility in your equity. When you predefine exits, you remove emotional decisions. When you journal emotions, you build self-awareness. When you focus on process, you detach from short-term noise. Slowly, something changes. You feel calmer during pullbacks. You accept stop losses faster. You stop checking P&L every 5 minutes. You stop forcing trades out of boredom. You begin to trust yourself, not because every trade wins, but because you know you'll follow your rules regardless. That's professionalism. It's quiet, it's controlled, it's repetitive, and over time, it's profitable, because the market rewards emotional stability, not excitement, not intelligence alone, not prediction. Stability. This is the shift from chasing money to mastering yourself. Buy calls. This is your final wake-up call. Not another tip, not another setup, not another motivational quote you feel for 5 minutes and forget tomorrow. A decision. Because at this point, you already know enough. You know your patterns. You know the cycle. You know the emotional spikes. You know the regret after revenge trading. You know the frustration of breaking your own rules. The question is no longer, why am I not profitable? The real question is, how many more months are you going to repeat the same cycle? How many more times will you lose doubt, K-switch strategy, feel hope, lose again? How many more screenshots will you save of perfect setups you didn't take? How many more times will you promise yourself, from tomorrow, I'll be disciplined? Be honest. How much money have you already paid to avoid fixing yourself? Because that's what it is. Tuition. Every blown account, every oversized trade, every moved stop loss, every emotional spiral. You weren't paying the market. You were paying to avoid confronting your own instability. And the market keeps charging you until you learn. What if the market isn't your enemy? What if it's your mirror? A mirror doesn't lie. It reflects exactly what stands in front of it. If you bring impatience, it reflects losses from impulsive entries. If you bring ego, it reflects oversized drawdowns. If you bring fear, it reflects missed opportunities and tiny winners. If you bring desperation, it reflects chaos. The market doesn't punish randomly. It responds precisely. It rewards discipline. It punishes emotional instability. It exposes weak identity. Every single time. You don't get paid for wanting it badly. You don't get paid for watching charts all day. You don't get paid for knowing terminology. You don't get paid for predicting direction. You get paid for executing consistently. And consistency is not built on hype. It's built on identity. So decide. Are you the trader who needs to win today? Needs to recover losses immediately? Needs to prove intelligence? Needs the market to validate them? Or are you the trader who accepts probability, respects risk, executes rules without negotiation, detaches from outcomes, thinks in hundreds of trades, not one? Because you can't be both. One identity chases, the other executes. One reacts, the other responds. One fights the market, the other aligns with it. Right now, profitability feels like something that keeps slipping away from you. Like you almost reach it, almost stabilize, almost break through. But almost is the comfort zone of someone who refuses full responsibility. If you truly want consistency, you don't need another strategy. You need a new standard. A standard where you don't move stops. You don't size emotionally. You don't overtrade out of boredom. You don't close winners out of fear. You don't chase after losses. A standard where your behavior stays the same, regardless of the last trade. That's what the market respects. And here's the part that matters most. You don't become profitable by chasing profits. You become profitable by becoming the kind of person who can handle profits. Because without discipline, profits disappear. Without emotional control, size destroys you. Without identity shift, success feels temporary. So stop asking, when will I become profitable? Start asking, who do I need to become to handle profitability? That's the real transformation, not from losing trader to winning trader, but from emotional operator to disciplined executor. Stop chasing strategies. Start mastering yourself. Commit to becoming the person who deserves consistency, not because the market owes you, but because you finally built the internal structure to sustain it. And understand this clearly, the market is not running from you. It's waiting for you to stabilize. The day you stop fighting the market and start mastering yourself is the day profitability stops running from you.